Today we are going to talk about the powers of the regulator, and we want a little bit of understanding about the financial regulatory framework in Sri Lanka as well. Because in this diploma, we are basically focusing more on the Sri Lankan context, but we cannot ignore international scenario. Why? Our regulatory framework almost based on the international regulatory framework. That's what we want to study this one as well. And it's really important being the compliant professionals to learn and understand who are the regulator and their powers. Because when we are working in a financial sector, not only the financial sector, as I mentioned you earlier, not only the financial sector, there are some other regulatory aspects also. Now look at the, in these days, perhaps you might know and you might notice that there are regulators for health sector as well. And all the consumer products are regulated by various kind of regulators. So they have a different capacities and different powers. But here we are going to talk about the financial sector. Why we want to talk on that and why we want to more focus on that is, you may understand, as I mentioned at the first lesson, first lecture, we talk about the without financial sector, without regulatory framework, right, we cannot undertake any financial transactions in a proper manner. That's the correct word. Anybody can undertake the financial transactions, but it's not healthy for the institutions and all as a country. That's what the regulatory framework should be there. So that's what now if you look at the Consumer Affairs Authority, it is also one of the regulatory authority in Sri Lanka in case of consumer items and services, except financial sector services, right? By look at that, the service they are providing, action they are taking. But remember that if the regulator is not strong enough, if the particular institution or particular regulator is not having adequate power, he become ultimately he become a powerless guy and a useless guy, right? So that's what the various kind of enactment regulations are empowered to, right, have a kind of this framework structure in each and every country. By looking at the history which we learned last week, so many international regulators, they're monitoring international financial system. In our financial system also part and parcel of the international financial system. Therefore, we are required to, right, have these kind of regulatory framework in line with the international standard. That's the most important. Remember that in case of consumer affairs, flour, coconut or rice is not a common regulation for all over the country. Sorry, all over the world. But if you look at the banking sector regulations, right, banking sector regulations, financial sector regulations, and FIU regulations, those are common to each and every country. Those are common to each and every country. Perhaps you could remember that, right? Those regulations are based on the basic principles of these regulatory institutions. The Basel Committee basically, they focus, right, regulatory framework on bank, and now they move to reinsurance and investment activities, right, like that. And the FATF Financial Action Task Force, they are basically covering the money laundering and terrorist financing aspect. It's not common to the financial sector. It's go beyond the financial sector, non-financial sector as well. If you look at the Basel Committee, right? Basel Committee, they basically focus banking sector, right? If you look at the IMF, they are basically focused on the financial sector, right? Likewise, those common international standards are in the world in case of financial sector, not like a consumer sector, consumer items and consumer services. But remember that what the point I have to talk over here is, right, even though you have seen the various type of regulators, their powers, their services, their good and services they are going to regulate are different from each other. But if you look at the financial sector, services and product are much and tougher regulated by the regulatory institutions. That's what being the compliance officer, we want to learn this type of topic, because without understanding the regulatory powers, without understanding the regulatory framework in the country, we cannot move forward. Because we are working for the Sri Lanka, so we should know who are the regulators in the Sri Lankan context and what are the powers of the particular regulator. That's what the purpose objective of this lesson. Right. Now, talk about the, right, just in a brief way, powers of the regulator. In that sense, I just want to regulatory structure of Sri Lanka. If you look at the Sri Lankan regulatory structure, much power. Or otherwise, most of the sectors are regulated by Central Bank of Sri Lanka, CBSL. CBSL is the main regulator of the country. Main regulator. What are the institutions Central Bank monitoring? Can someone highlight?
Bank Supervision Department.
Yes, that's the bank. That's the regulatory arm of the central bank. Central bank regulate banks, right? So there are different type of banks, right? We will come to that point, but just we'll say that one is commercial banks, one category. Then specialized bank and some foreign banks as well. That's the one category of the foreign bank. Why I am especially mention foreign banks? Foreign banks are subject to Sri Lankan regulations as well as their own country regulations, right? SL context and their own country context, right? Okay, this is the one aspect, right? We'll move forward, right? Central Bank of Sri Lanka, right? There are other regulators as well. Those who are regulating banking sector. Banking sector. Right? Right? So why? So if you look at the Bank Supervision Department, right? They are looking, yes, they supervise the banking sector. Their angle is prudential supervisions. Prudential supervisions. In overall supervisions. Overall. Right? They look at the overall performance of the banks and they look at the overall banking performance and overall weaknesses of the particular banks and overall structure. That we call as the macro level, right? That's the macro level supervisions. Macro level in whole institutions. Macro. Those who know economics may know that. What's the macroeconomics and microeconomics, right? Macro and micro. Here, macro means entire institutions or things. Right? Micro mean sector-wise. Sector-wise. Right? Or fraction of the operations. Fraction of the operations. Right? That's what the, if you look at the banking sector, right? banking sector, right? Central bank supervises our bank supervision department, but not only that, within the central bank, there are several arms to supervise the banking institutions, right? I'll explain it later. Then, not only that, there are other supervisors, those also supervise the banking sector. So that means in our banking sector, we have a multiple regulatory structure, not single regulator. Multiple regulatory structure. We will come to that point later. I will gradually explain it. Just for that, the beginning. Now, just to explain you this point over here. Now, suppose that central bank is regulating bank. I'm not going to right now. I'm not going to talk about the other department over here, the central bank. Just broadly macro level, see that yes, central bank is supervising banking sector, banks. Yes, correct. Then other regulators. Now remember that as I mentioned in the first day, now FI also monitoring, right, banking sector, right? It's not a central bank arm. It's not a CBSL arm, right? Even though it's located at the central bank, it's a different arm, right? Different arm. When we are talking about the FI, I'll tell you and I will teach you operation of the FI differently, right? Even though FI is located in the central bank, it's a totally independent institution which supervises banking sector. In case of FIU, banking sector is one regulatory sector. They are regulating multiple sectors. Bank is a very small sector for them, right? So under this regulator, right? So other regulators, FI will come to that, right? Likewise, right? Understand that, right? Main regulator is the Central Bank of Sri Lanka in our country for the banking sector, right? Not only the banking sector, central bank regulates other institutions as well. I tell you that one also. Now remember that regulatory structure is more complex. Not only Sri Lanka, each and every country, there's a complex situations, regulatory framework, right? Okay. Then it's a broadly here, right? Regulatory central bank is the main regulator of the country, right? There are other regulators which regulating the banking sector. Why the banking sector, right? As I mentioned, if you look at our financial sector, more than 60% of the financial sector covered by the banking sector. Because of that, we are giving the prominence for the banking sector, central bank, right? But if you look at the other countries in the whole world, yes, banking sector become a prominent sector. That's what each and every country more focus on the banking sector and countries have their operations. Okay. Then when we are talking about the regulations, right, we have to talk about another sector, right? Remember that banking sector. I'm taking the banking sector to highlight those things, right? I believe that most of you are from the banking sector, right? Banking sector regulated by CBSL and other regulators. Right. Now, if you look at that, those institutions issue the various type of regulations, right? Guidelines, instructions, various kind of things they are issuing. Who are the people who implement those things? Who are the people who implemented those kind of things? Now, there is a set of people working in the banking institution, not only the banking institution, other institution as well, right? We call them the compliance professionals. It's become a professional job now, right? Bank have some time, compliance department, compliance unit, right? Likewise, branch, right? Likewise, now banks also giving the more prominent for the compliance divisions and compliance department and the compliance professionals. Why is that? Why is that? Why is that? They are the people who looking after the health of the particular institutions. If their diagnosis is wrong, if the compliance professional diagnosis is wrong, that's wrong for the particular institutions. It's a look like the doctor's job, right? If there is anything happen to your body, right, you have to go and see the doctor. There are so many attendant nurses right behind him. But the doctor's job is to identify, diagnose what is the sickness of the particular individual, and he will, right, he will prescribe some sort of medicine for a particular individual. Likewise, if you look at the banking sector as an individual, chief compliance officer with his supporting team, the chief compliance officer he's a doctor who is specialized in this compliance subject. He will have attendants and nurses to support him, like in a medical team. He will diagnose that, okay, look at that, our banking institutions, there is irregularities, mismatch. Things are happening in line with the instruction given by the central bank or FIU or any other institutions. So he should understand what's the wrong with that, where the wrong has gone, which people are involved. He has to diagnose it properly. To diagnose it, he should have a thorough knowledge about the rules, regulation, guideline, and operation instructions. He must have a wide and broad knowledge on that. Otherwise, he cannot understand it. If the chief compliance officer or compliance officer in charge of the particular thing is not familiar with the particular role, if he cannot understand properly what the instructions given by the FIU or central bank or bank supervision department, he cannot diagnose it properly, right? So that's what the role of the compliance professional, right? He should familiar with that and should be able to diagnose what the wrong has gone, where wrong is, and they have to find out, then they have to find out the remedification measures, proper medicines. That's what. Now understand the type, nature, and powers of the regulator. It's the most important. Yes, right? I talked you at the earlier presentations, right? There are multiple regulators on the banking sector. Being the compliance professional, right? You should understand what type of regulator he is. What is his objective? What is his scope over there, right? That's understanding is more valuable. Otherwise, you won't be a proper compliance officer. Then the nature and powers of the regulator, right? That's the most important, right? Nature and powers of the regulator. What are the powers of the regulator? What sort of action can be taken by the particular regulator if the banks overall has done the mistakes? If you are not correctly answer these things, regulator will take the action on that, right? So in that sense, most important part is understand the type, nature, and powers of the regulator. What type of regulator he is, right? what type of action is going to take if something goes wrong, and right, what are the powers. Powers is most important, because if you look at the structure of these banking regulations, I believe that perhaps almost those who are familiar with the banking sector regulation issued by Bank Supervision Department and the FIU, if not, that will be the part and parcel of your exam, right? Before that, you must read whatever the circulars regulation issued by the Bank Supervision Department on bank supervisions. Might be your liquidity issue, risk issue, corporate governance, everything you should know. Then the FIU regulation, those are the two main institutions which regulate banking sector. What is the FIU regulations, right? What is the particular enactment on that, right? What are the guidelines issued by FIU? You must have a thorough understanding on that. Remember that all these guidelines, in case of FIU, that has been published in the FIU website. If you go to the FIU Sri Lanka, you may see everything over there. Enactment, rules and regulations, right? Everything's are there. If you go to the central bank website, go to the Bank Supervision Department, you may find out those things as well, right? So FIU website is different from the central bank website. So look at that one. Then you must have a clear idea about those regulations. Otherwise, you cannot go these things. When I'm going to talk about the FIU, I'll explain the right much power vested with the FIU. Now here, remember that, right? Understand the type, nature, and powers of the regulator. Then the next important part is familiar with the powers of the regulator. That's important, right? Now, in the first stage, you understand, right? Who is the regulator and what is his power, right? Here, right? Familiar with the powers of the regulator, right? Nature of the powers and the powers of the regulator. Now, remember that, right? If you are not 100% compliant as required by the Bank Supervision Department, Director Bank Supervision, he has the right to, right, even close or cease of the business of the particular bank, right? Bank. Cancel the license also. But again, right, if you look at the FIU angle also, there's so many powers not in line with the bank supervisor, right? Those are much more powerful regulations than the bank supervisor, right? It's a serious regulation by the FIU. Then we'll talk it little by little in the next lessons. Understand the right of the regulator to bring actions against entity and individuals. Then you must have a knowledge about the right of the regulator to bring actions against the entity, right? Action to be taken the particular entity or individuals, right? There are some regulations on this banking sector, financial sector, not only the bank as a whole, right? Particular individual can be taken into, right? Taken into the court, right? Taken into the court. Your CEO, your board, right? Your CFO, right? Chief Internal Auditor, Chief Accountant, and Chief Compliance Officer, right? So everything are there, right? If something goes wrong on that, right? Everything, if something goes wrong on that, right? Those individual is personally liable in some context. That's what. Hope you could remember that, right? When this proportion, Asian crisis plus world economic crisis, I believe that I have explained you. In the banking sector, there is international regulations. I believe that I have explained it, right? Banking sector. Now there are two key officials managing the banking sector, CEO and CFO, right? CEO, Chief Executive Officer or General Manager, his role is different from the CFO, Chief Financial Officer, right? He is the right guy who is responsible on all the operation with regard to the financial, not CEO. If there is a malpractices, mispractices, and a manipulate of the account and financials, right? Actions, financial, right? What you call that financial regulatory framework of the particular banks, CFO is a liable. He's the guy who liable. Other than that, all others are liable by CEO. It does not mean that board is not liable. Board also liable, right? Board also liable, right? So if you look at the corporate governance regulations, there's a demarcation between powers and functions of the board and CEO. Why those demarcation is there? Because of these situations. Right? Now, CEO cannot pass the ball to the board. Board cannot pass the ball to the CEO. Because there are clear demarcation between their boundaries. What is the job of the board? How the board members are appointed? What's the term of board members? What is the role of board members? That's the difference, right? If you look at the CEO, what is the role of the CEO? What should be his qualifications, right? What is his right? What is his activities? Those things are clearly demarcated now under the corporate governance, right? So later lessons you may understand what the corporate governance is. While going through that process, right, you may very familiar what I'm telling over here. Then compliance officials, they should familiar with the powers of the regulator. Otherwise, they cannot do this job, right? Why this important is, right? Compliance officer is the sole responsibility of the compliance of the banks, right? Compliance of the banks. That's what the under the FIU law, right? Now we are asking the bank board to appoint the compliance officer, and that appointment have to be certified by the CEO to the FIU. Otherwise, just later you cannot appoint the compliance officer to the FIU. Right? It should be board approved, CEO certified individuals. Then it means that it's a tough job. It's not an easy job. Right? Why? If something goes wrong, the FIU people will come and take the compliance officer, chief compliance first to the grid. Right? Remember that. That's the role of the compliance officer. Remember this. That's what you must understand these rules and regulations. Okay. Then the next point, power and ability to permit, authorize the commencements and demand the cessation of the business. Here, right? Here, compliance people should know, right? What is the authority? How the authority is given to the commence the business, and what are the occasions? Cessation of the business. Why? That's the most important part, because if something goes wrong, if the institution's business are terminated, right? Sometimes board may question the compliance of you haven't tell us, you haven't highlighted this. Why the board members are sitting the board in occasionally? Those are not regulatory employers. Those are not regulatory employees, right? Sometimes they may change, right? So the guy who working in the bank, compliance officer, is the one and only officer, right? Report those kind of things to the board through the CEO, level of compliance of the particular institutions. So in that sense, you should have a thorough knowledge about the, right, what are the powers of the regulator and what are the ability to permit, authorize the commencements and demand for the cessation of the business. In what scenario they can permit to establish the business, what scenario they can close the business, right? Close the business. Now remember that if you look at our history, banking history, there are few occasions the regulator closed down the banking business and merged this business with other banks. As I mentioned you in last part of the 90s, BCCI banks was collapsed. That has been merged with the Ceylon Bank at that time. That's the most powerful bank at that time, fourth largest bank, based on the asset and liabilities. That also collapsed because of money laundering, right? So entire asset and liabilities were vested with the central bank. Then later on, that has been handed over to the Ceylon Bank. Then you might know that Pramuka Bank case. That's one of the specialized bank that has been collapsed. Entire asset and liabilities temporarily taken over by the central bank, right? So they try to rehabilitate that one particular banks, and by doing so, they create the Sri Lanka Savings Bank later on as a government entity, right? So likewise, that regulator have powers to do whatever he wants. So that means not whatever he wants. That means that's under the particular enactment, Banking Act, right? Monetary Law Act. Then they authorize the commencement and demand the cessation of the business. So they can ask for okay, stop the business. These finance companies, you may notice that central bank closed down some finance businesses, right? You know that TK Finance we closed, right? What you call that Selinco? What is that finance company? I just forgot it. Anyway, right? Then likewise, there are few finance companies who are closed down by the central bank because they given the time for the rehabilitations, come up with a good proposal to rehabilitate it, take into the previous position. If the central bank is not satisfied, they are closing those particular institutions, the finance. I'm sorry, yes. So likewise, then the power to make a decision about the conduct of individual in the regulated sector. Power to make a decision about the conduct of individual to work in the regulated sector. Now remember that. Being the compliance professionals and being the CEO, being the CFO, otherwise being the board of director, right? Remember that being the board of director, right? They are subject to corporate governance filtering process. Before appointing that, they have to get the clearance from the regulator. Anybody cannot be a board member. They have to obtain the clearance from the central bank, Bank Supervision Department. We called that process fit and proper decisions. The regulator will check the particular individual is fit and proper to undertake the business. There are some instances where Bank Supervision Department rejects some names of the individual, saying that they are not fit and proper. Right? Perhaps you might know that there are some political calamity of those kind of things because of the central bank decisions, bank supervision department decisions, right? So likewise, right? So central bank can check the fit and proper, because each and every senior management people, CEO, CFO, and board of directors appointment subject to the fit and proper test of this bank supervision department. They have to give their clearance. Otherwise, he cannot be a CEO, CFO, board member. This fit and proper test have to be conducted. So in that sense, so regulator will empower to take a decision on not only the bank, particular institutions, and the senior management as well, whether he's a fit to work in the particular institutions. Fit and proper, that's the one, right? Fit means academically he's a fit, and whether he's an experienced guy. And the proper, fit and proper, his conduct is proper. Right? If the central bank find out these particular individuals is a criminals, right? They will not allow him to sit in the bank. Right? So that's what we look at the criminal profile as well. Right? Yes, that's the issue. Huh? There are so many rules and regulations now to check the balance of the bank in operations, fit and proper test. Right. And again, powers to the regulator, right? Then we should know what are the powers of the regulators. Right? Powers are different from a country to country. Right? Why? As I mentioned earlier, even there are also global standards. Those standards are imposed in line with the particular country law. That's what the difference. I told you, country laws are different from each and every country. Right? Because of that, international standards should be implemented in line with the country law, but particular country cannot change the standards. That's the important part, right? They cannot violate the standard, international standard, whether that is right imposed by the FATF, Basel Committee, or IMF. So those are the standards, but in line with the country particular law, they have to implement it. Why this particular law? Remember that law of the particular country is different from others. If you look at the British, right? It's a different from the US. It's a different from the Sri Lanka. It's a different from the Hong Kong. But standards are not different. Those are unique. Those are unique. Because of that, based on the particular law of the country, domestic law of the country, they have to implement those kind of standards in line with, that's what the country assessment by the various kind of regulators and institutions. They evaluate the particular country, whether they have implemented their international standards in line with the domestic law to protect the international standards. If there is a breach on that, those international monitors will also take actions against Sri Lanka or whatever the particular country. Right? I will explain that quite correctly and more, right? Clearly, when we are talking about the FIU operations, I told you 2 times we are in the gray list because of the unclear, right, or right gravity situation of the particular laws in the country. Right, we have to clear it up in line with the laws. That's why. Not only that, there are some embargoes on Sri Lanka some time back. Right? because of they highlighted that this is the standards, but you have not implemented properly. Right? It should be a direct way to understand it, right? Whether it's implemented in India or Sri Lanka or Maldives, by looking at the context of the particular law, regulator can understand, yes, that's correct. That's all, right? So approach, and because of that, approach and function of the regulator may change country to country. And sometimes these approach are complex. Why it's become a complex? Implementation of these regulation might be sometimes might be complex. We know that now. Remember that. To look at the different laws. Now see, if you look at the Middle Eastern countries, they are having the Muslim law, Sharia law. Implementing these kind of international standards that have to fit with their laws. Because those international monitors, they are not going to change the law of the particular country because they cannot do it. Why? There are some custom and traditions and laws which are developed so many centuries in the particular group or ethnicity group or particular country. They are not going to touch upon that one. But they are asking, okay, within your law, within your custom, within your tradition, yeah, those are the standards you must implement. That's what, right? So it's an obligation of the particular country to implement particular standards in line with these custom, regulation, and law of that particular country. But in ours, law is different from others, right? Law is different from other countries, right? We have our common law called Roman Dutch law, right? In addition to that, we have regional laws, and we have so many traditions and customs. We must honor it. But in line with these particular laws, particular customs, this implementation have to be there. If you look at the UK situations, their laws are basically traditions. They don't have much of the written law. Those are in traditional practices. Those traditional practices now become laws of the country, right? And people now tend to honor these traditional practices, not like in ours, right? Okay, now look at that. Now so many laws. So in that sense, those approach or function of the regulator different from country to country, yes. And many approach are complex. So in that sense, approach are complex because of this particular laws and tradition of the country. If you look at we have got the example, right? USA. USA is a big country. They have, right, two government structure. One is federal government, which rule entire America, USA. Then they have state government, right, which rule the particular state. So because of that, many agencies at the state and federal level, right? Now look at the Federal Reserve Bank, Central Bank of US. So they have one Reserve Bank, Federal Reserve Bank for USA, but they have few branches in the state-wise. If you look at the regulatory structure in the banking sector as well, there are federal laws on banks and the state laws in the banks. Luckily, we don't have, right? Otherwise, someone can say provincial laws and the state laws like that. Luckily, we don't have that. But if you look at India, yes. India, they have states, they have state law, they have federal laws. But in case of India, you can't compare the India with the USA. But the USA system is different from the India. Indian states are not that much of, right, similar to American states. Because of that, Indian federal law is much powerful than the state laws. Right? If you look at the Indian situation right now, carefully analyze it, I don't like to highlight it. The agriculture law in India right now, right? That's what the lot of big issues in the India right now. Look at the federal laws and regional laws or state laws. That should be a good example for you to understand difference between federal laws and state laws. But if you look at the USA situations and the Russia situations, right? Federal laws are more strong than the state laws, right? There are some restrictions to the state also, right? They cannot undertake any, right, international agreement. State government cannot undertake or sign any agreement with the other countries without permission from the federal government. That's what. So that means no foreign affairs, right? So though they cannot have a intergovernmental affairs without permission from the federal government. Basically the more restrictions on the each and every federal government. So many agencies at the state and federal level in these countries separate but sometimes duplicate regulatory authority, right? Now, good example in the USA. Federal Reserve Banks also supervise the bank, right? That's in macro level, basically. Then the state agencies also supervise the banks. That's in the, right, micro level. So in that sense, someone can argue that the supervisory aspect is duplicative because federal agencies also asking some information. State agencies also asking same information. But you can't say that we have pride with the federal agency, right? It might be a kind of burden for the particular institutions, but can't help because of the regulatory structure. Because of the regulatory structure. That's what we say that it might be the duplicative situations. Same thing you have to report to the both federal as well as the state regulatory agencies. Now, so now see, right? In the other countries, there are several countries, as I mentioned you, there might be separate regulators for each and every sector, right? But there might be single regulator for each and every sector. There are some countries, they will have a regulator for each and every sector. So that means banks, finance companies, insurance companies, then the stockbrokers, everything's are regulated by the one institutions. There might be single regulator. A good example is UK system. Now very recently they wanted to divert from that system as well, right? FSA, Financial System Authority of UK, they will regulate each and every sector, right? There are some countries like Sri Lanka, they will have multiple regulators. In ours, we have multiple regulatory system. For the banks, central bank. For the finance company, central bank. Then the insurance sector, we have Insurance Regulatory Authority, Insurance Board of Sri Lanka earlier, right? Then the securities sector, we have Securities and Exchange Commissions. Likewise, each and every sector, we have multiple regulators. So we have a cost and benefit of that. One can argue that single regulatory structure might be, right, cost effective and much effective of regulations. Sometimes some can argue that, right, multiple regulatory structure can be more appropriate and cost effective, likewise can argue. But remember that that's depend on the country to country and their structure. That's what practically we have seen. If it is a large country, they must have, right, multiple systems. Because of the geographically, they cannot control that one, right? So you may ask the question, sir, UK is a big country, why they have a single regulator? But even though UK is one single country, they have a 3 states which have independent governance rules, right? Then someone can say EC or European Union, EU. They have a different independent countries, but for the certain approach, they have a single regulator, right? European Commissions. But that's depend on the nature of the particular country. So nature means that in order the development of the particular sector. If the countries are so developed, equally developed, their per capita or financial sector run in the same manner, same principles, then that's easy for them to regulate. Otherwise, poor countries like ours, we cannot have a single regulatory structure. Now compare, practically you can compare. Now these banking sector institutions are much more developed than the other institutions. Am I correct? Yes. Right? Now secondly, the insurance sector also come into that level, but if you compare with the banking sector, they are not in line with that development. Right? Now these Securities Exchange Commission institutions, right? Brokering firms, are they in that category? No. Right? So likewise, in the developed countries, if their financial sector, developed financial market is developed, those institutions are playing almost equal role. But country like ours, we don't have that much of development. Because of that, each and every sectors are not playing. They are not bigger players of the market, financial market. In our country like ours, bigger place in the market is bank, right? That's what I told you. The single structure, multiple structure regulatory system will apply to the, right? It's depend on the country to country based on their economic development, their knowledge, their growth, right? And some other many factors, right? And sometimes the single law concept also applicable to that, right? So in addition to that, there are some pillar structure, right? So they say that, okay, some countries, they say that, okay, depending on the importance of the particular sector, they have taken the approach. They say that triple approach. That's basically China and India. They have identified three main financial sectors in these particular 2 countries are banking, securities and derivative business, and insurance. Because of that, they have a triple approach. That means they have 3 biggest regulators for these 3 institutions, right? Banking, securities and derivatives, and insurance. Those are most powerful regulators. That's in China and India, right? So you can argue that why not say in our country? We have a triple approach. We have multiple approach, right? Not triple. Then right. So likewise, now we have to talk about the functions of the regulator now. What the regulators are doing? Are they only regulators? Are they doing the regulations? Right? So to regulate that one, they have to have a regulation first. Right? They have to provide the regulation first to the market. Right? They have to provide the regulation first to the market. Then based on that regulations, the bank or insurance or stockbrokers firms or any other institution, they will act on that. Because of that, right? So regulator first should place their regulatory framework. So in that sense, the functions of the regulator can be categorized in different way. Developing the rules of principle, on eligibility of those who can conduct financial service business, right? They have to develop rules and principles on eligibility of those who can conduct the financial service business. Who can conduct the financial service business, right? Their eligibility, their suitability, right? So can anybody understand, sorry, can anybody start the financial business in the nowadays? Can you open the bank today? Can anybody open the bank today?
No, sir.
No, yes. There are some regulatory framework how bank can be implemented. There are necessary requirements. There are necessity requirements. Necessity mean, right, compulsory. Then it should be a public limited liability company. It shouldn't be owned by the single person now. Go to the stock market if it is a commercial bank, right? Right? Sell the shares to general public as well. Should be monitored by the, right, SEC, Security and Exchange Commissions. And those who are invest in the bank, major shareholders, they are also subject to fit and proper for their conduct, right? There are some single shareholder rules and regulation by the central bank. Those rules have to be followed. As I mentioned you, board of directors and the developers are in line with the central bank fit and proper guidelines, right? Without that, without considering those guideline rules and regulations, right, nobody can open the business, especially financial service business. Now those things are applied to the finance companies and insurance companies, sorry, finance companies and what to call another business, leasing, right? There is a separate enactment on that. Based on enactment, they have specified who are the eligible people to, right, start, commence the business. That's the number one. Then there should be authorization process. There should be authorization process. Now, in case of banks, finance companies, leasing companies, now they have to obtain the authorization license from the central bank, right? They have to get the license from the central bank first, secure license. Otherwise, in your own, you cannot set up the business. So you can say that, sir, there is a lot of finance companies are coming up, right? Yes, there are. Without getting the permission from the authorization from the central bank, non-bank supervision department. But we call them as illegal finance business, right? Even though there are regulators over here, still some people are opening, right, conducting unauthorized finance business. That's we call as illegal, right? Even though it is illegal, yes, you can see there are a lot of business are mushrooming. One can argue that why central bank cannot take the actions. That's a difficult issue for us right now, because those kind of smaller finance companies can be opened in a very grassroots level. Perhaps you might have seen that last couple of weeks and months, there are unauthorized finance companies in various places. One in Kurunegala, one in Kalutara, one in Matara, right? One in Anuradhapura, right? There are. Now, only you know that the pathetic situation in the Sri Lankan context is our people, our depositors, they don't care about whether those institutions are authorized or not by the central bank. There are. One thing is lack of understanding on the particular business. Second thing is people don't know. Perhaps they don't know. But sometimes even they know it, right? we have identified most of the greedy people are going over there. Now look at the interest rate in these days, because that also helped to come up with this unauthorized finance business, right? The interest rate is, what is the situation of the interest rate in the market right now? What is the situation of interest rate in the market right now? Deposit rate? Fantastic. Huh?
Very low.
Very low, yes. Once the rates become low, right, what will be the impact of that? Tell me in the practical scenario.
More and more people will be tend to take loans and advances.
Okay, yes. That's the people who know about the banking. Am I correct?
Yes, sir.
Okay. Now, right. Say that poor people, those who have money in the village level, those who are not having a good knowledge about the banking, what they are doing.
They will go to the money lenders.
Yes, that's right. So what happened?
They will charge exorbitant rates.
Yes, most of the people will expecting the more and more return from the unauthorized finance business, right? So that's what the people are moving on that directions. That direction. That's the kind of issue right now the regulators are facing, because of the low interest rate in the market. Now, so earlier for the 100,000, right, whatever amount they deposit, they get right more than 10% or 12% interest rate. Now the rates become low, it's around 5% right now, I believe, right? So people thinking about that, okay, why should I deposit money in the bank or finance company, right? That guy is giving me 10%. So people, they don't think that, right, they don't assess the risk of the particular institutions, right? And sometimes, even though they know it, they don't care on that. They don't care on that, right? So perhaps, there are a lot of people, I have practical experience on that. I don't know whether I have mentioned it earlier. There's one guy who giving the very attractive interest rate in the, right, down south. I don't like to mention the name over here, right? So we conduct the awareness program on the government employees and the top class people over there in the Hambantota district some time back during that period. And we give the instruction not to invest that type of institution, because at that time those kind of institutions are mushrooming in the southern area. We talk to them, okay, don't undertake these investment. Right after our sessions, most of the people come and say that, okay, sir, right, okay, we will going to, right, withdraw this money and we will keep this money safe place like bank. Some of them have done it. Some of them have done it. But the following day, the particular individuals and group of people come and see those people say that, I say, I have given the 15% to you, I'm going to increase it to 20%. Can you deposit with me? Yes, following those people has gone and again deposit the money at the 20% rate. Hope that whether, I don't know whether you could remember or not, 1 month right after the particular situations, but I'm not telling that right after this lectures over there. There was a, right, sad situation over there. Individual, those who have conducted this finance business were vanished. Some have gone abroad. Some have, nobody can't find those people yet. So what happened to the money those people have deposited over there? Finally, we got the kind of, right, information on that, those who are depositing the money in these particular institutions were leading government officials. Leading government officials, right? Not the poor people, not the village level people, right? And most of the educated, leading people in the particular area, those are the people who deposit the money in this particular illegal financial business. So in that sense, we cannot say that, even though we are telling that people, they don't have any understanding, even though they have understanding about the illegality of the particular institutions, those people deposit the money in the particular institution, illegal institution, because of the higher return, number one. The second one is they are greedily activities for money. Now they lost the entire money. That's why. Even in the Sri Lankan context, what I have experienced is, even after the first lesson or two lesson, our people are tend to do the 3 lesson also. That's the nature of our people, right? That's what those illegal financial institutions are mushrooming all over the country, right? Regulator cannot undertake 100% regulatory framework, because sometimes we are not getting the correct informations and correct time. Once we get in the information, sometime he might be finished the business and, right, vanished the country. He has gone out of the country. That has happened sometime, not sometime, but 2 to 3 months ago in Kalutara and the Kurunegala also. That's what the practical scenario. Okay, remember that what I am trying to say here is, right, so it's the job of the regulator to develop the rules and principles on eligibility of those who can conduct the financial business. So before we go for the investment, we should check whether he is a eligible guy, permit guy from the particular regulator, central bank or any other institutions, right? Then whether that's one is that license, then the authorizations, and the regulator developing the rules and how to conduct the financial service business, prudential rules and business rules. There are 2 different rules. We will talk what are the prudential rules and business rules. Now further, at this moment I will explain. Prudential rule is to conduct long run, feasibility of the business in the long run. We are talking about the prudential rules. Business rules mean when you are doing the day-to-day business. Now, for example, in the nowadays, okay, we say that as a prudential rule, central bank supervision department can say, right, okay, your, what do you call that, non-performing loan ratio should be 2% or 3%. If there is anything increase on that, it may not be healthy for the banks. So banks should have taken the action to minimize these non-performance loan context portfolio. That's a prudential. Or otherwise, they can say that, okay, the loan given to the customer should be in line with this requirement, in line with the government or in line with the country. Right? Those might be the prudential rule. The business rules might be different from that. Now, business rules also, sometimes regulator may involve in that. Perhaps you might have noticed that the foreign exchange buying and selling of the bank in business last couple of weeks. There are restrictions by the central bank on those business. And there are some specific regulation on that, right? Likewise, business activities also can be, right, limited or restricted by the regulator, right? They can decide minimum and maximum loan rate, like a deposit rate, they can decide, right? This is the rate you can give to the particular loans. This is the minimum rate you can give the customers. This is the maximum rate for the particular business, say agriculture or personal loan, those are the maximum rate you can apply. Likewise, business rules also can be implemented. In addition to that, sometimes they will fit and proper context, they will specify the qualification and experience of the particular individual, those who come into that position as well. So likewise, business prudential rules and business rules are healthy for the banking business. So they can, regulator can decide that one as well. So in addition to that, supervision of the compliance with the rules. So now they issue the rules. Based on that rules, they can supervise that particular institutions. Why they going to supervise it? Why the regulator come and supervise you, particular institutions? This supervision can be two approach. One is desk-based supervisions, Another one is off-site and on-site supervisions. Off-site mean official may not visit to the particular institutions. They will ask for the several information in quarterly, monthly, quarterly, or annually. Based on that, they will conduct the supervisions. On-site mean the official will visit the business place. They will check each and every business transactions, particular documents, or otherwise it can be a combination of both. That's depend on the particular supervisor. Supervision of the compliance with the rules. So now they have given the rules. Now based on that rules and regulations, the supervisor will supervise particular institutions. It might be a desk-based supervisions, off-site to on-site, or otherwise combination of both. Desk-based supervision mean, it's a on-site and off-site. They will call upon all the informations and while sitting in one place, they will examine it. Or otherwise they will come to the particular place and they will check all the documentations. Most of the time, depending on the situation of the particular institutions and the particular occasions, they will conduct both of that. In the Sri Lankan context, usually our bank supervision regulator, bank supervision department, or non-bank supervision department which regulate the financial institution, finance companies, they will call upon the certain information from the particular institutions and they will visit on a regular manner, to the particular institution and check and verify information they have provided. In case of FI operations, we have all those things. We have desk-based supervisions, on-site and off-site, and we will have a combination of both. And sometime they will have spot examination as well. Without telling that, FI official will come and check. That's what, That's depending on the supervisor's approach. They will conduct, suitable supervisory methods. They will use the supervisory method in line with their requirement. Now, if they find out any kind of loopholes, mismatch, breaking of the rules and regulations, the supervisor will conduct investigations on the suspected breaches of the rules. Sometimes the supervisor itself will conduct the investigations, or otherwise they will get the support of the other law enforcement agencies, depending on the situations. Now, example like this, Now see, remember that there will be a cybercrime frauds. Cybercrime frauds. Right? So might be bank supervision department of the central bank, they will come and check it. Perhaps FI will come and check those things. And thirdly, those two institutions will inform the law enforcement agencies to undertake investigations on behalf of them. Oh, otherwise, particular institution can also make a complaint to the police to undertake the undertake the investigations on that. Right? So regulators' approach and the law enforcement approach are two different things. So regulator will look at whether there are any regulated breaches over there. Right? As and when necessary, law enforcement agencies will come and check whether there is a enforcement breaches over there, law breaches. Right? It does not mean that we are not checking the law breaches, we are also doing it. But for the further investigations, right, regulatory agencies are empowered to take the support of the law enforcement agencies. That's what. So FIU having its own law enforcement agencies to monitor and supervise and investigate its activities. Right? Okay. And again, the functions of regulator. Right? So functions of regulator, enforcing rules. Now they have come to the bank. Now remember that you the license, regulated it, find out the breaches, then they are taking the enforcement actions now. In their regulatory approach, there might be rules on enforcing, right? Enforcing actions. Taking enforced actions, basically that depend on the punishment of the particular institutions, right? Particular institution. Now remember that. Now if there is any breaches in terms of regulations, if the regulator may decide to take action based on his own experience and based on his rules and regulations, he will take the actions. Sometime might be the financial penalty also. Financial penalty also. Right? So there are some instances where if you have taken the such actions against the particular banks. Right? So likewise, enforcement rule can be implemented by the regulator. Right? Then if we are not satisfied with the particular actions, we can have a cooperate and exchange those information with other regulators as well. Other regulators mean regulators within the country or regulators in the other countries as well. Regulators in other countries as well. Now remember that if there is any, now see, foreign bank are setting up over here. If something goes wrong with a particular foreign bank branch over here, being that particular branch located in Sri Lanka, our bank supervision department can take the actions against the particular breaches. Right? In addition to that, being the branch of the particular bank over here, it's the obligation of the particular regulator to inform the particular bank regulators. Now see, for example, we have a bank branch of Indian bank branch was established in Sri Lanka. So being the regulator in Sri Lanka, right, we have find out any kind of breaches over there. So we took the actions. Then what we are doing is, being the kind of settlement and the agreement with all those regulators and banking businesses, we will inform it to the particular bank head office in India. your particular branch in Sri Lanka, they have violated these things. Because of that, we have taken these enforcement actions. Detailed report we will provide the particular bank also, and the copy to the regulator in India also. Regulator in India also, to take necessary action by them, because it is a branch of the particular bank. Being the branch, our actions might be bit of limited. It does not mean that 100% limited. We can take the action against a particular bank branch as a courtesy, and to take more and more actions about the head office level, right? The particular regulator, country regulator will inform to the regulator in this country to take necessary action and for information of their necessary actions, further actions on that. Might be being the branch over here, action we have taken may not be so tough, right? May not be so tough. Being their head office, they will take more power, they will have more power to take tough actions on this particular branch, right? Remember that because of these two territories, regulators' aspect will be limited to the particular territory, right? Now remember that banks which are set up in other countries, they are subject to our regulators' purview, and the country that particular branch located in, regulators in the particular located branch. Now see, we have, now for example, just for the highlighting purpose, being the Bank of Ceylon in Sri Lanka, Sri Lankan Bank of Ceylon, they have branches in India, Maldives, London, like that. Being the Bank of Ceylon branches, they are subject to Sri Lankan regulator as well. In addition to that, they are subject to particular country regulators as well, right? If the particular branch is located even in the Maldives, Maldives Central Bank is subject to supervise the particular bank, particular branch, I'm sorry, right? And in our country also, right? So we also have a certain obligation to monitor that operation of the particular branch. Likewise, because this bank is established over here, that's we call it overseas operations. There are different approach for the local operation as well as the overseas operations. But in case of the FI operations, these operations are a bit of difference. What we are doing is, we have taken the actions for the particular bank over here, as and when necessary, we will provide those information to the FI in India. FI in India, right? They will use it as some time to take necessary action on the particular banks, or they will keep those informations for the future reference as well, right? In case of FI, we have a sharing mechanism about those info. That's how the criminality action will be taken place all over the world. Now remember, those are the right. Cooperate and exchange information with other regulators. Now remember that, now as I mentioned you earlier, banks are doing a lot of business now. Not only the banking business. There are some fee-based activities, insurance activities, then the, what you call the investment activities, securities market activities. So being the bank supervision department is central bank is the main regulator, while undertaking these kind of operations, so we have to work, this particular regulator have to work with those sector regulators as well, because banks, businesses are now diverted to a lot of sectors. They undertake the insurance, they undertake the investment, right? So likewise, so those institutions also involved in. Because of that, right? Because of that, so if something goes wrong with their investment in a stock exchange, being the bank supervision departments of central bank, if they find out any kind of breaches over there, those information share with the stock and exchange, right? Then the FIU find out any kind of activities with regard to their investment happening over there, right? We are taking or we are informing those information to the stock and exchange to take appropriate actions on that. So likewise, there are intercooperation between regulators as well. Intercooperation between regulation as well, right? If they find out any kind of wrongdoing over there, they will inform to us also, right? Other regulator, whether it's a bank supervision or FIU, they will inform to us. So likewise, there is cooperation between the regulators. Because of that, now particular institutions are regulated by the multiple regulators, as I mentioned earlier. Sri Lankan context. Okay. Now we talk about the regulatory models, right? So again, these regulatory models are depending on the country to country. Now we talk about the regulatory framework, structure. Now we are talking about basic approach regulations. Number one is rule-based approach, right? Rule-based approach. That's the most familiar with the Sri Lankan context. Rule-based. Rule-based approach. Right? So regulator issue set of rules. Right? Regulations. Right? So based on these rules and regulations, right? Whatever the banks or the finance companies, they will undertake their activities. Now, to say, for example, simple example, we will take agriculture loan component should not exceed 10% of the loan portfolio. Right? That's one conditions, one rule, right? So bank very carefully, right, monitor and keep this 10% margin should not exceed. Right? That's the right rule-based approach. Now say another example, right? Appointment of the compliance officer should be by CEO, subject to board approval. Right. That's the rule. They must do it. They can.
So is it should excuse me, sir? So is it should not exceed or should exceed 10%?
I'm sorry.
That the component, I mean the exposure to agriculture, is it should exceed 10% or should not exceed?
No, that's the limitation is 10%.
You have to have more than 10%, right?
Yeah, no. We should limit to the 10%. Should not exceed.
All right. Okay.
Right. So that means maximum is a 10%. If they exceed the 10%, means that's a violation of the rules. Right. Now see, investment in share market should not exceed 10% of, right? 10% of the, what you call that, capital or something like that. Right? Now here portfolio, here I am mentioning over here. Now see, their loan portfolio for the particular period, say that 100 billion. Need to get my point? For the particular year 2020, now 2021, right? The bank is supposed to give 100 billion loans. Right? Out of these 100 billions, for the agriculture loan should not exceed 10%. Right? Should not exceed. Right? If exceed, that's a violation. So that means they cannot give the 10.5. It's a violation. Right? Now see the personal loan components. Personal loan, right, should be, right, 10% of the loan portfolio. So that means your loan portfolio is a 2 billion 2020, right? 2020, it shouldn't be a 21, right? It should be a 21. It should limit to the 20, right? The regulator may not take action if it is 18, right? Because should not exceed. Limit is 20. They cannot exceed this limit. Once you exceed this limit, means it's a violation. Right? But there, sometimes interest, there might be interest conditions. Agriculture loan, maximum rate for the agriculture is 12%. So bank cannot lend more than 12%. It's a violation. Bank cannot say 12.5%, they cannot lend for the agriculture. It's a violation. Right? I took the very simple example on that. Did you get my point?
Yes, sir.
Yes, sir.
Okay, right. Okay, right. That's what I just told to tell you. But there are some occasions. Now again, you know that there are some occasions, right? Banks violate those things. I'll show you that kind of things. Sometime back, I believe that 4 to 5 years time, right? There are also conditions by the government, right? Bank should lend, right? At least 10% of their loan portfolio to agriculture. Right? So remember, that's a different scenario which I mentioned earlier. Earlier I said that, okay, maximum is 10%. Here, right, the bank should lend at least 10% of their loan to the agriculture. At least 10%. Say that their loan portfolio for this year 2020 is 100 billion, right? 100 billion mean out of this 100 billion, agriculture loan should be at least 10 billion. At least 10 billion. That's the minimum. Regulator may not take actions if it is a 15 billion. Right? Now see, they will take the actions if it is a 9 billion. Why? That's a violation of the conditions. Violation of the conditions. Okay, I hope that you get the clarifications on that. Right? Okay, right. Two different scenarios of understanding. Huh?
Can you explain the previous one, please? What's the difference?
Previous one, right? Yes. Previous one is, again, remember that that's the understanding issue. Huh? In the compliance of it, you should understand how it worded over there, right? That's important. Otherwise, you become a violator if you not clearly understand these rules. First scenario is bank should not bank should not lend 10% of their portfolio to agriculture. Right? Right? Then this is A. B, right? Bank should not lend 10% of their, right? Okay. Then the bank, right? Bank at least should lend 10% to the agriculture. Okay. Now remember that. Now see here 10%. Now here remember that by looking at these two scenario, yes, they should lend the 10%. Right? Here should not exceed 10%. Right? So that means the limit is this. Now see, 100 portfolio, 100 billion, right? 10 is here, should not exceed me. This is the boundary for agriculture. Okay? So you can't have a 10.5. You can't have 11. If you violate these conditions, that's the violations. Here, right? At least 10%. You should give 10%. Right? It might be a 25%. There's no violations. 25 billion, 30 billion. It's not violations. But if you limit it to 9.5%, this is the violation. Right? 9.9 is also violations. Right? Bank, right? That is that. Yes. Bank at least should lend 10%. So that means this is the limit, 10%. If you lend the 9.9%, that's the violations. Right? Here, now see, 10 is there at the first scenario, right? You can't violate from this side. Right? The second scenario, you can't violate in this side. Hope you get my idea, right?
Yeah, got it, sir. Thank you.
Okay, right.
Yes,
That's how you have to be very careful understanding of the words of the regulator. Right? If you are not right, thorough and clear on that, please talk to the regulator and get the clarifications on that. Otherwise, you are the people who penalize him because of interpretation of these kind of things. Right? Okay. Right. Rule-based approach. So these rules, right? So these rules, they will just describe those. The rules are issued by the regulator. What is this? Rule-based. Regulator and no regulators may prescribe what the firm must do. That's what I just want to explain you all. Then what the firm must not do. Right? Through the regulations, regulations, right, can say those are the banks should do, right? Those are the things banks should do. Right. Then these regulations, right, can say those are the banks should not do. One set of rules can be prescribed, activities can be done by the banks. Activities can be done by the banks. Right? Then second regulations can say activities cannot be done by the banks. That's for the simple explanation. Now I am telling you. Right? Then if something goes wrong, right? Tell me that by looking at these two scenarios, regulator will take action on what? Action on what? Regulator will take the action on what?
Second one.
Yeah, right. Yes, yes. Definitely second one they will take. Right? Second one, yes. There is a prescription bank should not do. Should not do, yes, definitely they will take the actions. Right?
I think
Now
on
see,
both.
here also, there is a prescriptions that bank should do. Right? Bank should do. Yes. Bank should do. There's no violations. Grossly, there's no violation. This is violations. Violations. Right? When we are doing these things and these things as well, but there are some gray areas. Perhaps you might find out the certain gray areas. Right? What are these things? Now, regulator may prescribe that, as I mentioned earlier, agriculture. Right? There should be clear definitions on the agriculture. What are the scopes? What are the activities come into the agriculture? There should be clear definition on that. Now, see, if you look at the agriculture mean today's context, if there is no clear definitions on that, right? Now see, simply we think that agriculture mean farming. Farming or something like that. But if you look at the broad perspective of the banking, you will provide the assistance or loan to particular farmers, right? Particular farmers to okay. One thing is, right, borrow seeds, borrow chemicals, borrow fertilizer, and borrow equipment, right? Generally, I'm telling that. So under this equipment, if there is no specific classification on that equipment mean, you can play spray guns, even the tractors, right? So agriculture related various type of machinery so can be included over there, right? So that means agriculture. If you are not correctly specify, regulator not correctly specify those kind of things over there, agriculture mean now the today's context, it's a very complex, right? Harvester can be included, seeds can be included, chemical can be included, fertilizer can be included, right? This agriculture related weapons, equipment can be included. So whole thing comes to the agriculture, right? So that means you have to be very careful, get the clear idea, definitions on that. What you mean by the agriculture, what sectors to be financed by the banks, right? Now, basically when you are talking about tractors, Those are the right land vehicles, usually for the farming, agriculture-based equipment. But sometimes tractors may not be included because it's a commercial vehicle. Sometimes they classified it. That's what this classification is most important. Now see the fisheries. Look at the fisheries. Right, 10% for the fisheries sector. Now look at the broad angle of the fisheries. In a country like ours, once we label the fisheries, mean we have smaller type of boats, multi-day boats, and this net or something like that. But if you look at the fisheries industry in other countries, right, compared to Sri Lanka, the industry is much bigger than the ours. They are not talking the smaller guys, those who are in the boat and catch the fish for the 2 kilos or 3 kilos. They are talking about the huge ships which are catching the fish. Trawlers. That also can be fisheries. Multi-day boat, big boats. So likewise, you have to get the kind of clear definitions on that. What is agriculture, what is the fisheries? That's what I am telling, right? Rule-based approach is sometimes may not be clear, right? But it might be clear, right, if it is defined in very understandable and clear level. That's what I say, that legislator or regulator may prescribe what the firms can do, what the firms cannot do, right? Right? That's why that's the important. That's the regulation clearly explained. Now, under the agriculture, those are the aspects you can finance. Those are the sectors you can finance, right? So they can explain, okay, right? Those are the sectors. If those sectors are not mentioned above, those are not financed under the agriculture. Likewise, fisheries sector also can be like that. Now look at this personal loan category. That is also very cumbersome now, right? Personal loan category is very cumbersome now, right? But you know, the practically there are some limitations on that. Personal loan means someone can take the loan, spend for the enjoyment, right? Someone can buy a car, right? Someone can, right, go for a trips, right? So likewise, there might be the personal consumptions. So there should be some clear definition on that. So that's what the, right, rule-based approach. Regulator may prescribe what the firms can do, what the banks can do, and what the firm cannot do. Set out firms' obligation towards clients and shareholders, right? So under that category, while prescribing what are the rules, what are the, right, guidelines firms can do or not, then they can set the firm obligation toward the clients and shareholders. Why? Ultimately, the beneficiaries should be the clients and the shareholders. If you look at the banks, shareholders, they might be the investors, and the clients might be day-to-day customers of the particular institutions. The basic approach, rule-based approach. That's the usually now, even though we are talking about the rule-based approach, that seems to be a good, but now the entire world is bit of, right, changing this rule-based approach because of the practical difficulties of that, right? They now they are moving toward this one, right? Principle-based approach, right? Principle-based approach. So in this, the regulator will focus less on the details of the rules, right? So they are not basically focused on the rules, but they are not giving the much of the rules of details of the rules. They talk about the principles, right? And they allow the firms to, on how firms interpret the, right, broad principles. Now see, look at this like this. I believe that most of you are familiar about the KYC policies, right? KYC policies, right? Know your customer policies. But there is a rules on that KYC rules. We prescribe that the information you have to be taken. You have to be taken. Now remember that those are the necessary and minimum requirements. Minimum requirements. But if you think that if you require more and more details about the customer and the customer operations, you are free to get more information on that. Our regulation prescribes the minimum rules, minimum information to be collected. Now see, if you think that the particular customer is vulnerable, or you are having the information about his criminality, involvement with any other charges, so your duty to collect more and more information on the particular customer, right? That's the minimum. So that's what the, right? So even though we are prescribing the rule-based approach, it's a prudent to particular institution to collect more and more information. Rule-based approach. Here, principle-based approach. Principle-based approach, the particular institutions are given the kind of flexibility, but it does not underscore about your roles. The regulator in that scenario, principle-based scenario, the regulator will focus less on the details of the rules. That means we are not talking about the details of the rules, right? Then, right, those we are giving the ample time, ample space for the particular institution, particular bank to interpret those broad principles. So that will depend on the particular bank how it interprets it. But the interpretation should be healthy, yeah? Not for your own benefits. Not for your own benefit. For example, principle may be broadly worded such as a firm must observe proper standards of market conduct. That's a very broad principle. Firm must observe proper standards of the market conduct. Market conduct, what's the market conduct? For example, in the banking sector, proper standards of market conduct. Not only the regulators, rules, regulations, and practices, you must observe, right, other practices as well. That's for the good practices for the market conduct. International standard for the market conduct. Those are not rules issued by the regulator. Now remember that there are some sectors, say banking sector, finance sector, insurance sector. Now there are some international standards coming in. So in addition to the regulators' principles, you must follow these international standards. That's what here we are mentioning that. Not only the rules, there are some principles. In addition to that, there are certain standards by the international recognized organizations and banks. You must support it as well, right? When you are giving the loans, borrowing from the market, international market, in addition to the set of guidelines, there are some standards. Now see, in the practical scenario, we say that, now see, there are some standards of the countries and the banking institution, B grade, C grade, BB plus, A plus, like that. Now when we are giving this kind of facilities, right, so they are considering that standard as well, but that's not a regulator's purview, right? The international market now consider that rating grades as well. Those are this become international standards now for the countries, for the banks and other institutions, right? Those are also important for us. So that's what the meaning over here, right? So now power of the regulator, right? So now we have discussed the lengthy aspect of these things. So powers of the regulator we will discuss after the break. So please have a 15 minutes break. Now I believe that my time is how much? 10:40, right? Okay, come by 15 minutes, huh? Right, thank you. Have a break and have a cup of tea.
Okay, sir.
Hello. Yeah, okay, right. So, so we talk about the, right, thanks, Milik. Okay, we talk about the principle base. Regulator will focus less on the details of the rules, on how firms interpret the broad principles. Principle may be broadly worded, such as firm must observe proper standards of the market conduct. Right. So, right. Any questions up to now? Before we move on to next slide. Okay, right. So further elaboration of this rule-based approach. So rule-based approach. So what they have done over here is the rule-based approach, interpret the rules to some degree. Now remember that rules cannot be 100% explainable. Rule cannot be 100% explainable. But people are expecting rules are 100% accurate. That's what when we are issuing the rules, we are trying to keep the rules are 100% accurate manner. Because if something goes wrong in the particular rules, so someone can interpret in a different ways. So that's what we have to think about the how it interpreted. That's what perhaps you might have seen that court arguments, rules can be interpreted in different way by the lawyers, right? So that's what the range of that one. So that means the regulator's approach should be 100% accurate and correct. But remember that even though situation is there, regulator cannot be 100% perfect when we are issuing the rules. There might be some loopholes, some wordings arrangement, something like that. That's what nowadays people more prefer to have a principle-based approach. So principle, if the particular institution are not violate the principles, right? Here rule-based, it can be interpreted word to word. Lawyers can argue now, see, meaning of this, like that, right? The principle, if you highlight the principles, right, no argument on that. Here, basically, we look into that whether following institutions, bank or broker firm or insurance company, they have followed the principles, right? Because principles is defined. That's what that's a rule-based and principle-based approach difference. Usually supplemented. Now, if you look at the principle-based approach, rule-based approach, interpret the rules to some degree. Some degree mean not 100%. That's what, right? Sometimes if you have any kind of gray areas, cannot understand in your mind, you can check with the regulator. What would be the correct way, like that. The principle base usually supplemented by underlying rules and code of practices. Now principles mean, now we'll take the simple example which I mentioned before the break, KYC, right? Know your customer policy. Now we have given the some help for you to understand what the KYC is, how to understand your customers, what are the information to be collected. Now, looking at the complex world today, information you have collected may not be adequate to understand, realize who is the customer is, whether it's a whether he is an actual or real customer, or he is not real customer, is trying to manipulate you, right? So in that sense, now even the FATF standards which are published in 2012, right? Those standards are basically not rule-based. Those are the standards, or otherwise recommendations, right? Each and every countries are required to implement those standards and principles in line with their law, right? In line with their law. So that's what I told you, right? Every 3 years usually they will come and check whether you have rightly and correctly implemented those standards and principles. If you are not in line with these principles and standards, they will try to find out loopholes and weaknesses of the particular implementations. Then they will ask in the particular country to correct it, right? Correct it, right? To in line with the expectation, their expectations. That's what usually supplemented by the underlying rules and code of practices. Now these principles are usually supplemented by underlying rules and code of practices. What is this underlying? Supplemented. Supplemented with secondary wordings on that. Underlined by the rules and code of practices. Now remember the rules. Rules, that principles, how to implement the rules, they can give the kind of example on that, right? And code of practices. Codes of, now see, code of conduct, you may know. Code of conduct, right? Institutions and the working environment, you have to follow certain code of conduct. That's now, you know, nowadays all firms are, right, prescribe code of conduct and code of practices, even code of dress also, right? You must have these type of, right, clothes. Now remember that in the government service, there is a code of practices, right? Ladies and gents, right? They have a follow, or they have to come like this, right? Trousers and shirts with tie or coat or jacket or saris or something like that. Now these code of practices are mostly common in the most of the international organizations, banking institutions, insurance agencies. That's because of one thing is identification purpose, right? One thing. Another one is there are certain discipline on that, right? Certain discipline on that. Forget about these kind of wearing and sharing of those kind of, right, clothes or garment over there, right? Now see, before we come into the bank or finance institutions, now there's a training session for all the newcomers. Perhaps you might have undertaken these kind of sessions. In these sessions, basically 1 week or 2 weeks or 1 day or 3 days, senior management, they will teach you how to practice these codes, how to behave in front of the customers, what you have to do or what you have to not do, what you should do, right? What you must do, what you shouldn't do. Those kind of things they will tell you. And the word you are going to use with the customers, right? You can't usually, in the usual practical sense, you can't use the, now see, for example, there are some agreed customers, especially in the banking sectors in a rush time. Sometimes customers shout you Okay, I was in a queue for 1.5 hours. Nobody looking at me. Nobody supporting me like that. Customer is angry. But by looking at the particular customer, right, as a teller or officer of the particular bank, you should not in the same level to answer that particular customers, right? The particular customers. So that's what right, you have a certain kind of practices, how to maintain, how to mitigate, how to manage the particular customers, right? So usually, as I mentioned, principles are supplemented by the rules and codes. Code of practices is basically for the behaviors, how to practice those kind of things. So, aim of these rules and code of practices are conduct business with integrity, right? Now, see, look at the bank in business. The age of the bank in business is you are doing your business, right, using the someone else money, right? Your product is money taken from the someone else. It's your obligation to support respectfully for these people. So that means the depositors. Because if the depositors' money is not there, you cannot undertake the business. Being the officials, employees of the particular bank, it is your obligation to support, honor your obligation to the particular customers, right? So because of that, especially in the financial sector, this code of practice is much more important compared to others. If you go to the Sunday fair, if the particular vendor say that yes, bean is 300 rupees today, that's your willingness to buy or not, right? If you go to the bank in business, if the customer come to the bank in business, is asking to withdraw $1 million of money today, you can't say that, no, we cannot do it. You can't say. Why? He has the right to ask for the money because his money is yours. The vendors, bean of the vendors, right? If you go to the Sunday fair, bean is owned by the vendors. But if the customer come to bank, if he asks for the money, he's the owner of the money, not you. You are only trustee, okay, I take on that. So that means you should not refuse the right money which he asking. That's the difference between these two. Now remember, compare with that. That's what the finance business practices and codes are more important, right? Because you have to run the business. You have to protect the money. You have to have a really good relationship with the customers. Otherwise, you are losing your business, right? That's what the importance of these principle-based approach. Now, usually these supplemented, underlined by the rules and code of practices, because one thing is to conduct business with integrity. Integrity is most important. Integrity. Usually we call it honesty. You must have honesty with the customers and yours. If you don't have an integrity with your business, integrity with your life, right? You cannot undertake the business, not the banking business, even the other business, right? If you lose credibility and integrity with your wife and husband, you cannot conduct the business, right? If you lose the integrity with your friends and relations, you cannot conduct the business with them also. Business means not the banking business, other day-to-day activities, right? Integrity is much important, right? Integrity. Right? So basically, it's not a similar word. We call it as a trust. But trust is different from the integrity. Integrity is much more, right, weight than the trust. Right? So if you lose your integrity, right, with the business, right, people won't come, customer won't come to you. they will lose their business. You will lose the business. So that means whatever the actions you are taking on the customer, you must protect the integrity of your business and the customers. That's what the principle-based approach, right? So rule-based, remember that it's a more bit of difficult to understand. Rules, those are some kind of words, right? If there is any loopholes, you can hammer the regulator. Say that this is wrong of the regulator. But regulator also be careful, because we are not issuing the rules if there is any loopholes on that. Right? That's what. You can argue with the regulator, okay, that is not the correct way to issue the rules. Or this rule not right telling to these kind of things to be done by us. Right. But if it is designed by the principles, right? You can't have argument with the regulator because they have defined only the principles. The KYC, as I mentioned you, yes, we have use of principles, right? Additional information, collecting the additional information is your job. To justify additional info, so your job, right? So why this principle-based approach now taken is to protect the integrity of the business. Integrity of the business. Right? Integrity of the business. Right? Trustworthiness of the people. Right? That's the number one. Number two, protect the investors. Protect the investors. We have given only the principles. So you cannot violate it, that principle. That means, right now see, principle you say that, okay, once you receive the money from the customer, you must protect it and, right, give him appropriate returns. That's the principle. So that means you cannot lose this money. Once you lose or manipulated, mishandle this money, right, you become a criminal. Right. Protect the investor. So that means one hand is the customer of your bank, right? Other hand, investor, that's the shareholders of your bank. What they, right? You must give the appropriate return to the shareholders. Otherwise, they won't reinvest. Because now see, while investing in the banking business or any other business, they are expecting much more return on that. Otherwise, they won't invest it. Now, comparatively, right? So why we go for the bank's deposits? Right? Whether it's a 5% or 10% or 15%, because we think that the return we are getting is enough for us. If we find out another avenue to get more and more investment, more return on that, definitely we will move over there. That's what we are taking the risk. Right? Now we are telling that bank investment, bank deposit risk free, but I am not telling that 100% risk free. Right? We deposit the money and we can enjoy the life, right? Satisfying the return we are getting from the banking deposits. If you are not satisfied on that particular, right, investment or return I am getting, I can move business, agriculture, or illegal depositors also. Right? Taking the high risk on that. So likewise, the bank, finance company, they have to conduct business with the integrity and to protect the investors. Then the principle might help to, right, mitigate the risk, system risk also. What is the system risk? Risk, banking risk might be the different. Banking risk might be difference. The various risks associated with the banking business. Here we are talking about the system risk, systemic risk, systemic risk. Right? Earlier I talked about the liquidity risk, right? Liquidity risk, business risk, right? Then what you call that? Integrity, various kind of risk are associated with the banking business, right? Yes, systemic risk mean, right? If something goes wrong today in the bank, it will lead to the entire system, banking system. That's the one angle, right? The second angle is within the bank. Within the bank, if the branch is collapsed, right? Definitely, people will shout, and eventually that will lead to the collapse of the particular banks. Or banks in another province or something like that. If it is a big country, right? So this now say that okay, branches in Ratnapur area collapse. Or this spread all over the country, saying that okay, bank ABC branch of Ratnapur is collapsing, or huge fraud over there, right? That will lead to the banks, entire banking system, particular banks, and people will tend to, right? Not always, they have a doubt about the sincerity, integrity of this bank. They will try to withdraw money. Then what happened? So issue with regard to the survival of the particular banks. So that's what there should be principles. That's what the regulators may issue the principle-based regulatory approach. They are taking the principle-based regulatory approach to reduce this systemic risks. Right? So that's what the most important part, right? Principle-based approach, basically targeting the few principles, conduct business with the integrity, protect the investor, and the reduce systemic risk. Right? My presentations over there might be some sort of, right, order might be changed anyway. Right. Okay. I hope that you get the fair idea about the rule-based approach and principle-based approach. Again, let me to explain it briefly. Rule-based approach means regulator will issue the rules, right? So you have to conduct your business based on the particular rules, right? That's the number one. So what the rules say, you may follow, right? If you have any kind of gray areas and practical difficulties, you have to check with the regulator and get the correct understanding of that. That's a rule-based approach. There are some principle-based approach. Mostly in our country, we have rule-based approach. But if you look at the European countries, they will always follow principle-based approach. Right? We prefer to have a rule-based because it's easy. Principle-based approach, basically, in the developed countries, they provide the principles, defining and conducting the business is a particular institutions, right? So if there is a violation of the principle, then the supervisors will come and do the, right, undertake the kind of regulatory actions on that. Usually, this principle-based approach underlined with the rules and the code of practices aiming to conduct the business with integrity of the business, protect the investors, reduce the systemic risk. But while going through in a broader way, whether it's a rule-based approach or principle-based approach, ultimate objective is to, right, integrity of the business, protect the investors, and reduce the systemic risk, right? Ultimately, those are the objectives. Otherwise, whether it's a rule-based or principle-based, if the customers are, if the bank is not protecting their investors, if you are not conducting the business in integrity manner, and if they are facing the systemic risk mean, right, your business are not in line with the required level. That's what the, right, regulator's job, to ensure your institutions are working in that environment. They will issue the rules or, right, guidelines to manage those kind of things, whether it's a rule-based approach or principle-based approach. Right. Now look at the step of the regulations. Steps of regulations. Right? Number one, authorizations. Number two, supervisions. Number three, enforcement. In roughly, authorization means the particular individual or, right, group, they authorize to undertake the business. Without authorization, you cannot do the business. If you are not seeking the authorization, it's become illegal. Illegal means, right, regulators can take the action on that. Authorization is most important, right? Then once the authorization is given, regulator will supervise you. Supervision might be in a different way, on-site, off-site, like that, which I mentioned simply last time. Then the enforcement, if they find out, right, any kind of breaches of the authorizations through their supervisions, they can take the actions. Action might be legal. Legal means enforcement action means through the court proceeding, or otherwise not court proceedings. Some regulators have power to take the actions similar to judicial power. Right? Wind up the business as well. Those are the steps. Right? Step of regulations. There are regulations related to the authorizations. There are regulations related to the supervisions. There are regulations related to the enforcement. Simply, I'm telling that authorizations, regulators should authorize the particular individual or group of individuals to conduct the relevant business. It is a bank, finance, or insurance. Right after the establishment of the institutions, the particular regulator will supervise your business. Business supervision might be a different, on-site or off-site. Then through the supervision, they will find out any kind of loopholes. If there is any loopholes on that or breaches of the authorizations, they will take the actions, right? One actions, they can go for the court proceedings, or otherwise not court proceeding. Some supervisors have given some powers similar to judicial powers. They can enforce that authority to correct the particular breaches. Or otherwise, they can close down the entire business. Right, those are the 3 steps of the regulations. These 3 steps, there are steps to be followed. These are the main steps: authorization, supervision, and enforcement. Authorizations. So, step 1 is granting the operating license or permit to operate. Yes, now remember, in case of banks, they have to secure the permit or license from the central bank to operate as a banking business. Right? Not only that, that license have to be displayed to the people. Not only the banking business, if you look at the smaller business, grocery shop also, now they are required to show their license or permit to general public. Then people will understand that was authorized business. There are some people, they are displaying the unauthorized business, like authorized business, providing how? Illegally printed licensing process. So authorizations, right? So they have to secure license, permit to operate. In case of banking business, they have to make application to the bank supervision department as a regulatory department of the bank. There are minimum requirement to operate the banks. There is a capital requirement, management requirements, right? Key officials, those details have to be provided. Then they have to get the permission from the monetary board, supreme board of the central bank. Unless monetary board approved the particular institution, they cannot operate as a bank or finance company. There's a procedure of granting license. And not only that, there might be licensee fee also, right? An annual license fee. They have to pay that fee also to continue with the permit. If you are not honoring these obligations, the particular regulator have a power to cancel the operations. Then under the authorization, they should undertake only the activity that is authorized. They should undertake only activities that is authorized. So within their business premises, they have to undertake only the business activity authorized by the regulator. They cannot undertake any other activities. That was I am telling you, right? Some time back, the banking business, there was a huge competition among the banks mobilizing the deposits. Right? I'm telling you the practical example. Deposit mobilizing is a highly competitive in the Sri Lankan market now. Not today's, earlier. Now this banking has excess liquidity because of the current situations. But earlier, 3 to 4 years ago, there was a huge competition among the banks of mobilization of deposits. For that purpose, each and every bank have a competitive, they have created the competitive environment. What is this competitive environment mean? They started doing the various kind of publicity of mobilization deposits. Within that framework, they have provided various kind of gift, grants, right? Vouchers, those kind of things to the customers. By looking at the banking business, you are not permitted to undertake customers in that way, right? You cannot give the price or give to the customers to mobilize the deposits. One thing is that's increased your cost. Second thing is you will breach the ethical condition of the banking business. Ethical condition of the banking business. So that in a simple word, we are telling that you are trying to bribe the customer to get the money. Giving the house, giving the car, giving the vehicles, right? Giving the banks, giving the watches, right? Giving the kind of what you call that, pittalapahan, something like that. So those are the activities undertaken by the banks some time back. But as a regulator, central bank has to take a strict regulation on that, right? Not to do those kind of things, right? That's what the, right, granting the operate license, permit to operate, right? Operate. Then they should undertake any only activity that are authorized. Deposit mobilizations mean not to bribe the customers. In the regulator's angle, we are telling that it's a kind of bribe to the customers. Because you are paying, but another one, customer, he may not understand the why he's getting the gift. There are some manipulation inside of that business also, right? Okay, he will give the kind of gift, but cost will be covered by the customers. Customer doesn't know that. That's another angle, right? Regulator cannot look into that. Should undertake only the activity that is authorized. So that means, so you deposit mobilization in the banking business. Otherwise, it's not your job to give the lottery, conduct the lotteries, right? It's a lottery's board job. Why you should undertake in such a job? That's what the regulators are looking into that. Authorizations must not operate, violate permissions. Within your permission or license, there are certain conditions, right? So you should not violate the conditions. Now, in case of banking business, banking license to operate the bank, not to operate insurance business, right? Not to operate the stockbrokering business. So you must look at that one. You should not violate that business. If there is a permission to undertake that activity, is yes. Yes. In line with the regulator's approval. Right? In line with the regulator's approval. Now see, license you secured today only for the banking business. Time being, the financial market will change. Because of this change in environment, you have to change the banking business. If you want to go for the new field, you must get the regulator's approval for that one. Now see, you know that practical example all the banks are right now doing is electronic banking now. Earlier we had the manual banking. We have huge ledgers, book, passbook, something like that. Now everything's were vanished now. Entire things were, right? Entire things were operate through the, right, IT systems. So now banks are allowed to undertake IT business, right? Then they each and every instructions going through the mobile, email, other IT systems, you are transferring those information to the customers. There is no physical books and records. That is allowed. But regulator will look into that, whether you are correctly and rightly following these things, regulation in line with this new environment. That's what the regulator's observation, right? If you want to do the divert your business to another business, right, you must take the license from that one. Now the banking business are doing the phoning business now. Phoning is not your business, but you have taken the permission for that one. right? Now, sometimes you are selling the insurance. You are taking the business permission for that one. Likewise, considering the changing environment of the economy, if you want to change the business idea, you want to expand the business in another way, you have to get the regulator's approval. Perhaps you might have seen that there are big banks in the world. Within the banking business, they have a use various type of vehicles, right? Methods, system to divert banking funds to other businesses, right? That has been revealed later on. Then now international regulators, they have taken the strict action on the particular banks to restrict the business like that, right? Special purpose vehicle. I don't like to mention those big banks, those who are violate those international conditions and local conditions, right? But now they are restricted on that. If the regulator find out, if you are moving out of your scope, authorized scope, they will take the action on that, right? Then they must not violate operate permissions, condition of the permission. Then they consider the following factors. What are those factors? Let's see, right? Factors: fitness and proprietary, right? Fitness and proprietary of the business. This is most important, right? Now see, when you are joining the banking business, our usual scenario is call upon the, right, in addition to the academic qualifications or experience, basic practice is to call upon the report from the relevant police station to check whether you are a criminal or not. That's the most important factor for the banking business. Why? Always banks are trying to keep the good people in the particular places. If you have the criminal records, mean you are not fit and proprietor to run the particular businesses. Fitness is most important. Fitness will come through the academic qualification, experience, and that kind of reports. And not only that, those factors must be important for the banking business, financial business. Honesty, integrity, and reputations, right? To become a good banker, you must be honest. If you are not honest, you can't do the work in the banking sector, finance sector, because you are working with someone else's money. Integrity. Your integrity is most important to run the particular institutions. If you are branded as a culprit, you cannot run the banking financial business. In the reputation of the particular individual, to become a CEO, CFO, board of directors, you must show that your honesty, integrity, and reputations under the corporate governance fit and proper, those things will be considered. Then the competence, right? Your competence to run the business, right? Basically, those things apply to the senior people. Your competence to run the business, ability and organizations. Not only the competence, you must have the skill to run the business and organize the business. Then the most important part is the financial positions. You must be at least sound financial, healthy people, right? Healthy person to run the business. If you are not healthy, if you don't have sound financial positions, you cannot undertake the banking business. So that's what the financial businesses are. Directors and owners, fit and proprietary is most important. Then look at the scope of the business profile and plan. Those are the important. What are the scope of the business profile, and the plan? If it is a bank, insurance, finance company, right? Those things are important to run the business. Then strategy. what sort of strategy you are following to grab the market. Now in today's world, if you look at the banking business in Sri Lanka, banking business become a huge competitive because our market is very limited. If the new bank come into the market, the particular bank have to have a strict competition to grab the market share. Market share is most important to run the business, especially banking business. Not like a grocery shop, right? Not like a bakery, right? Because even though financial sector expanding day by day, the finance business, banking business is also expanding. So expanding means there is a limited scope for the newcomers to come into the market and have a competitive market share among the other players of the market. That's what the right business plan is most important. And the strategy to grab the market share. Strategy means it should be a good strategy, not the bad strategy, right? If you are taking the market in bad way, it's not healthy environment. That's what the strategy also important. Then the management responsibilities, how you manage the particular institutions, right? Whether you are adequately qualified or experienced to run the business. Because otherwise, even though you academically sound, if you don't have experience, right? At the first instance, you cannot run the business, right? You must have some sort of experience on that. Otherwise, especially in the banking, you can run the grocery shop. Even to run the grocery shop, you must have a bit of experience on that, how to run the business. But banking might be more than that. The scope is more, right? Scope is more wider than the smaller grocery shop. So in that sense, run the finance business, you must have management responsibilities as well. Then the compliance arrangement and activities, that's the most important. Even though chairman and board of directors are so competent, so experienced, financially sound, if you don't have a compliance structure, proper structure to run the business, proper structure to conduct the business activities, they won't be able to success as they expected. That's what I just want to say that. Okay, that's why the compliance arrangement is most important. That's why these compliance subject now become so important, because compliance means not compliance to the regulator, right? Not compliance regulator. You must compliance to your business as well, right? So that means the compliance staff have to be fully trained, fully understand people in the particular institutions. Why? Compliance will come from the various laws, various regulations, various institutions, and even the government. Now see, remember that if the government make a issue regulations, now remember that good example is, now in case of bank, now you have a import restriction issued by the government. You cannot import the vehicle now, right? So that's a direct, it's direct impact to the banking activities, because you cannot import the vehicle mean you don't have import business, no LCs, no foreign currency requirements, right? So there are some sort of impact to the banking business, and there are some import restriction on some items also. The import businesses now gradually move in other directions, right? So while going through this process, right, compliance officials should report to the management saying that, okay, right, this is the policy decision taken by the regulator or government that will have this direct impact to our bank. Our revenue will be like that. Our foreign exchange should be like that, right? So you have to have a good knowledge about these kind of activities to give the kind of guidance to your board of directors, CEOs, and CFOs. Right? So you must be thorough. That's what the compliance professional jobs. When you are talking, when we are learning the lesson from the Mr. Banu and the Ratnayak, they will explain you knowledge you have to gain on the compliance requirement, fulfill the compliance requirement. Right? So compliance arrangement and activities. Number one is you must train the staff top to bottom. Top to bottom mean that's your job to train your board of directors, CEOs, and another senior staff once you become a compliance officer. Because being the board of directors today, he may not have a sound knowledge about what the compliance is. What are the institutions to be compliance? They may not familiar with the compliance requirement, rules, and regulations by the various regulatory authorities. That's your job is to give a training or presentation to the particular staff. Then not only the senior staff, you must train your junior staff as well, right? With the support of the HR division, so HR department, you must train these junior staff. Now, those junior staff is the first, what you call the first contact point at the bank in business. In the branch level, when the customer comes, they will first talk to the teller of the bank, right? Those who are in the counters, that will be the first contact of the particular customers. If the particular staff, if we don't have about any kind of understanding about the banking requirements, rules and regulations, right? How to do the KYC, right? If those people don't have proper training on that, right? Your first activities might be not in line with the requirements, right? Not in line with that requirement. So staff training is much more important. The second aspect, the operating procedures. Top to bottom, people should understand what is the operating procedure, how to accept the cash, how to verify the source. So what are their authorities? Check whether it's currency notes are forged or not. A lot of things have to be there, right? So operating procedures. Then the in-house rules. You may issue the kind of various type of rules to within the particular branch, whether he can accept those money, whether he have to get the senior management approval, branch manager, your senior officer, junior officer, or something like that, right? So they have to have knowledge on that, in-house rules. Then the monitoring part. Monitoring means within the branch level monitoring as well as the bank level monitoring. How those money come into the bank, where those money are keeping. If there is excess, what those action to be taken to send this money to head office or central bank, right? So likewise, monitoring mechanism. And right after the depositing money by the particular customer, whether you have to get the further verification of the money or further verification of the particular customer, whether you have to find out any kind of record of the customer, you have to verify his KYC information given to you. Those kind of things are there. In addition to that, there might be customer complaints also. Customer complaints also. He may say that I'm not satisfied with your banking business, right? So I just want to withdraw money from the bank. If the customer withdraw money from your particular branch, right, it's not good for you all, right? If the customers, it's a one customer, two customers might be okay for the moment. But if the segment of customers come and withdraw their accounts, that will hamper the banking business. Reputation of your banks. That's also most important. That's why the training is most important about the customers. Then the notification requirements. Notification to the customers as well as notification to your staff. It should be come in a proper way, proper manner, proper time. Right? Proper way, proper time, proper manner, right? If something goes wrong in a different way, different time, you may lose your business, you may lose your customers. Now, especially Now you may notice that each and every day now you have to publish your foreign exchange buying and selling rate, your lending rate. That's the regulatory requirement now. If you are not doing it properly, right? If you are not doing it properly, customer might be misled, right? Customer may not come to the teller and they check with what the today's dollar rate. He will look at the kind of display over there. He will get the idea and he might go. And later he will come and say that, okay, yes, your requirement, that your selling and buying rate is this, right? I want to do the transaction like this. If you say that no, this is wrong, it's not correct, there might be issue with regard to your customer and you, right? Then proper notification requirement is most important between the staff, between the branch, between the bank branch, among the officials, and among the customers and the officials. That's what. So then the management, right? Management, which I mentioned earlier, might be the senior management or junior management, and the junior staff or senior staff, right? The most important part is qualification and experience. Whether you are qualified to handle this type of banking business or you have experience to run the business, right? Whether you are experienced to run the business. That's why these qualification and experience are most important. Qualification, you can obtain the academic situations. You might be a graduate or you might O level or A level or, right? So banking institution experience or qualifications on that, right? Otherwise, by experience, if you are compared to the beginners and experienced guys, your productivity might be changed, right? Your productivity might be changed. So usually banks are recruiting the trainers. You are not expecting the trainers, right? Much more output rather than the experienced guys. So you have a difference between these trainers. That's why you are putting the trainers and train them very well and try to give the experience to handling these activities, right? When you are recruiting the people to go the senior positions, qualification experience is much more important, because otherwise, being the senior officer, if you are not qualified to, and if you're not having the such required experience to run this particular position, will hamper the business as well as the junior officials. That's what these qualification experience are most important. Then the independence of risk and control management. Risk and control management. Independence of risk and control management. Right? Independence of risk and control management. Now, sometimes there might be the situation where you have to take the independent decisions considering the particular situations. Sometimes you may take the decisions as your own for the betterment of the particular situations, right? You may not have a time to check with the seniors, right? To check with the seniors. So in this, you must have a capacity, knowledge to take the independent decisions to face that situation and safeguard the particular institution and your staff. That's basically branch managers are facing these situations. Branch managers are facing these situations. If you find out an unexpected money come into the accounts, as a manager, right, you must have a experience and knowledge what to do in that occasions. What to do in that occasions. Right? What are the steps to be taken at that occasions? Might be some time, but guy will come and say that, okay, I have 2 billion rupees to deposit in the particular accounts, right? If you have a kind of suspicious of the particular individual, you must have a good knowledge and skill to handle the particular customer, right? If you think that if you have any suspicious, you must have knowledge to control him and hand over to the police or any law enforcement agencies. Likewise, depending on the situations, you must have a management skill to handle that one. Management skill to handle that one. Right? That's especially in the banking sector. This is most important because you are getting the more and more healthy customers as well as risky customers. Right? Managing of these two segments of customers is most important to handle your business, right? Because you have to handle the business, you have to safeguard the business, you have to look into the other customers, and also you have to manage that particular risky customers and criminals also, right? Then the conflict of interest. That's the most important part. Conflict of interest, right? Conflict of the interest. Now remember that when you are working in the bank, this conflict of interest is a matter. Conflict of interest is a matter. Conflict of interest. Now see, it's a very broad subject, conflict of interest. In the corporate governance sector, this conflict of interest is a big issue. Right? Now see, conflict in a simple way, I'm explaining you conflict of interest. Conflict of interest will be a matter, especially in the banking business. In the banking business, finance business, not a banking. Right? Why? I will take the simple example. Now, right? If a teacher, right, is a male teacher, right? Teacher, okay, teaching in a school and married, right? Teacher in the same school, they will have a chance to work in same place. Am I correct? Am I correct? Yes or no?
Yes, sir.
Yes. Now see, if you have affairs with the girls in a particular branch, you are working with the branch A. You have affair with the girl in the same branch, and finally you married that girl. She become your wife, huh? Is that? Yes. Right? Are both allowed to work in the same branch?
No.
No.
Yes or no?
No.
No.
No. Why? Why is that? Why is that? Very unfair, right? Once you become a teacher, you are allowed to work in the same place. Once you become a banker, you are not allowed to work in the same place. Very unfair. Is that? Huh?
Yes.
Is that? Yes, is it? Right? It's very unfair.
Yes.
Being the teachers, you are allowed to work in the same place. Being the bankers, you are not allowed to work in the same place. Why is that? Huh? Very unfair situation, right? Why is that? Because of this conflict of interest. Conflict of interest issue. That's a very simple example I have taken. Now, there is a predictions of that, or assumptions on that. Okay, now remember that You are a boss of the particular bank branch. You are a boss. Wife is second in command. Second in command. Huh? That's only the branch. Huh? His house is different, right? Huh? The bank branch, you are a boss, wife is a second in command, but house, the wife is boss, you are the second in command, aren't you? Right? We have these type of structure in the bank, structure of the bank, what happened? Right? What happened? It's easy for them to, right, undertake manipulative activities. Right? Manipulative activities. That's what because boss and second in command, altogether they can have manipulation of the activities of the banking institutions. And sometimes pass the entries. Sometimes can issue to pass the entries. Right? That's what these situations will have, right, established in the banking sector, especially identify the conflict of interest, right, and do the business. That's the one scenario. Then the second scenario, the broad scenario, on the corporate governance structure, you will learn this conflict of interest issue much more in a deeper way. I'm just explaining you very simple way, conflict of interest, right? Now remember that. That's the one aspect. The second aspect is, okay, I'm a branch manager of bank XYZ. Right? I have a total limit up to 10 million. Authority limit means approval of loan. Right? So my wife have a business. She run the business. Say that, okay, grocery shop, or right, smaller garment factory, right? She want to get the, right, 10 million worth of loan, right? She made application to this branch, XY branch, right? Am I going to entertain these applications? Am I going to entertain this application? So I'm working in the bank, particular branch as a manager. My wife is doing the business. She made application for a loan, 10 million worth of loan. What is the situation right now? What is the situation right now? Do we have a conflict of interest of mind?
Yes.
Yes.
There might be situations I can consider this application, right? Whether, right, even though it's not qualified to, she is not qualified to obtain the loan, I can approve that particular loan because I am a boss. I am a boss. Right? Those situations can be create the conflict of interest. Conflict of interest. Right? That's the, I'm sorry. Okay, right. That's the one occasion. Number three, I'm just trying to explain you the situation where conflict of interest are occurring. Right? Right. Then the number three situations, I'm taking simple example. Number 3. Right? Number 3. Right? Okay. I'm a board of director. I'm board of director. Right? I'm board of director. Right. I have a company. I have a company called X and Y. Right. Okay, then. Right. My company, right, made applications for 100 million loan. Let's go to the branch level. Then it's go to the regional level, then zonal level, and finally come to the board. Right? I'm sitting in the board. Being the board member, I'm sitting on the board. Right? Can I say that my company is not eligible to get this loan? Yes. Once the company made the applications, being the board member, I can have employees to give the preferred rate. Or low rate. Right? Being the board member, I can say, okay, not 12% loan, give them the particular company, you give the 6%. By employees in the particular board. So that means being the board member, I had a chance to manipulate particular rates. So that's conflict of interest issue will come into that way, right? Those are the very simple methods to, right, have a conflict of interest, right? Conflict of interest. So that's what the, right, when you are doing the regulations, right, basically regulators will look into that, whether there is any conflict of interest issues are there. That's what. Usually, now the banking sector people, those who are working in the banking sector, they are trying to minimize, right, these kind of conflict of interest issues, right, while transferring over in a different sections or division which are not related to each other, right? Which are not related to each other. That's how they manage it. Otherwise, there's no restriction to marry girl in boy in the banking sector, right? So reporting and management informations. Reporting and management informations, right? Top to bottom communications. Top to bottom communications. Right. Board of Directors, BOD, CEO, right? Then the other top senior people like that, seen DGM, right? DGM 1, 2, 3, like that. Then the regional or zonal director, zonal AGM or something like that. Then senior manager, like branch managers, and the ultimately, right, tellers. Right? This is the most important. How the reporting systems are work. Right? Now, whatever the grassroots level informations to report to the board knowledge. Whether it's essential. What are the important notice to be go to the board? What are the important things how to be go to the CEO? Right? So that's what these reporting and management informations. Management informations mean if the board taken the decision on the bank in business, these decisions have to go to the top to bottom. Otherwise, you cannot run the business. When we are doing the kind of regulatory aspect, we look at that Now see, for example, if we issue the regulations have to be go to the board, CEO, compliance staff, and the other junior staff till the teller, right? If the particular circular mentioned about the job of the teller, teller should know it. Teller should know it. If the things are related to the branch manager should know it. He cannot say that I am not aware of that one. If something goes wrong with this process, it's the obligation of the compliance staff to give the knowledge of that. That's what the compliance staff is there. That's what the compliance office is there, right? Compliance office is a monitoring authority of each and every step of the level of compliance of the particular bank, reporting to the management information. Right. And the resources, right? So whether there are adequate resources to, right, run the business. Regulators will look into that, right? Whether there is a financial resources in case of bank, right? Whether they have adequate resource to run the business. Whether there's a liquidity crisis in the bank day by day. Whether they will borrow from the, right, sister banks. Whether they borrow from the central bank on daily basis to run the business, right? They will look at, okay, right, seldomly or once a month or something like that, if you are doing those kind of things, right? Even though regulator may notice it, right? They will try to find out what are the reason behind that. Whether why they are having the financial difficulty in the banking business. Why those resources are not available. There's liquidity issues, right? You must, regulators may look into that. Then the human resources. One, right? If you want to run the business, not only the finance business, banking business, you must have a resource, ample resource to run the business in proper manner, right? In case of banking business or finance company, right? What are the most important resources you must have, right? What are the resources you must have, right? Compliance staff is must now, right? Compliance staff is must now. Then the branch level, if you look at the front office and back office, who are the front office officials? Who are the back office officials? It's not common to the banks, but even in other financial institutions, that should be there, right? Human resources should be adequate human resource to run the business. Out of that, compliance staff is must. Front office and back office staff should be there, right? Now you see the level of compliance now, each and every institutions. Then the next one is training. Training is most important to run the business. If you don't have proper training, training might be in a field level training as well as a, right, in-house training. Right? Once you recruit the people to the institution first, there's an obligation of the HR department to train them in each and every aspect. If you want to train those people in specific jobs, in specific office, you must train them. Or if you want to train the official in the compliance functions, give the training for compliance aspect. If you want to train the official as a teller, you must train them as a teller, right? Likewise, training is most important. Otherwise, without proper training, you cannot undertake the business. So being the regulator, they will look into that. What are the training opportunities you have given to your staff? What the frequency of training? Right? What is the frequency? Monthly or right, daily or annually or what? So then what are the training courses you have offered? Right? Likewise, they will look into that. Then the IT resources. Now we are living the IT world, and they will look into what are the IT resources available and the IT staff, right? How they work, how they qualified, are they adequate or competent enough to run the IT business, right? Resources are most important to the banking business and financial business. And the risk management, how to mitigate the risk of the particular institutions, right? How to mitigate the risk of the particular institutions. Then the number one is risks of quality of the risk management. You can have a risk management strategy, but regulator will look into that, how it adequate, whether it's adequate for the institutions. That's what they verify, the quality of that risk management. Your risk management strategy may not be limited to the papers. In a practical scenario, you must display it. Practical scenario, you must display it. Perhaps right after this terrorist situation in this country, how the central bank and the regulator, they have specifically given the instruction for the banks to, right, mitigate the risk of operations. Right? How they manage that? They have to have backup arrangement if something goes wrong. And now see, IT system carry always risk, huh? But once those things have happened over there, right, there should be a backup arrangement to restore it. Right? There should be a backup arrangement to restore it. And not only that, right? Now there is a specific, right, guidelines and regulation on having the disaster management center operations. If something goes wrong with regard to the particular bank or particular institutions, you must have a recovery system, disaster management system. Now see, if something goes wrong with your head office or main branch, there should be way to conduct this operation from somewhere else, right? Those are the steps they are going to check under the risk management strategy, quality of the risk management. Then the risk reporting, how they are going to report the risk, which way, to whom. First, you have to identify what are the risks with the particular institutions, particular branch, right? What are the mitigatory measures there, right, you are recommending, and there should be mechanism to report the risk to the senior management. If you are not in the position to take the remedy measures, if you cannot find the remedies for that kind of risk, you must report it to the senior management. Sometimes that may go to the board level. You can ask for the board observations or proper guideline from the board to take the mitigatory measures relating to the risk. That's the most important. That's what we call risk reporting. Then the risk matrices. You have to prepare that, okay, monthly wise, so annually or whatever, your risk management divisions have to prepare. Basically, risk management division will come with the compliance divisions, some institutions. You have to work what are the risks going to be associated with the particular business. So you have to make matrices on that, okay, liquidity risk, system risk, right, employment risk, right, likewise, those kind of things you have to categorize, and you have to show this to senior management in appropriate manner. You have to take the, right, relevant actions and remedies for that one. And the next one is business continuity. Business continuity is most important part. You cannot close the business forever, right? If something goes wrong now, within a reasonable period, you must be in a position to operate your business again, right? You must be in a position to operate your business again. Otherwise, trust on your business may lose. Trust in your business may lose, right? If the people think that if something goes wrong in your banking system, right? People think that you cannot operate as it is, you are losing the trust of your customer. They will go to another place, those who are maintaining the trust on that. That's what the business continuity plan is most important. Disaster management center planning, right? Within a shorter period, you must have a right way to operate that particular business as in a previous level, right? Now, for example, we'll say like that, if something goes wrong in your IT system now, you cannot keep it for days on weekly basis. Within a very limited period, short period, you must be in a system to restore the particular business as it is. Now say today you close the branch today. Okay, you say close the branch in a particular place. Within a very short period, you must be in a position to reopen it, even in another place close to that particular business, right? That's what the business continuity is most important, especially in the financial business, bank and finance companies. Now see, look at the kind of fire. If the particular branch is destroyed by the fire, you must have a system to operate in the same branch in a similar way in another place within a very short period. That's how you build up the business. Now these online banking and the branch network business in the banking community now, you can have these operations using another branch as well, right? Nothing to worry on that, but this continuity is most important. Now there are facilities in the each and every bank. You can deposit money in the each and every branch. You can withdraw the money from each and every branch. Likewise, there is a facility. But even under that situation, the branch operation is much more important, and the risk associated with the particular branch is very important, right? You must have business continuity plan to, right, undertake this business, right? Risk management is most important. Then the quality of the internal control. Quality of the internal control. You might have internal control. In case of banks, other institutions as well, you must have internal control system, right? If you don't have internal control, right? If you don't have internal control, what happens? If you don't have proper internal control, what happens? Huh? If you don't have proper internal control, what happens? Now see, right? Right. Internal control. Right, I'm telling these things again and again. Branch manager, then the senior staff officers, junior staff officers, right? Then the middle officials, then the tellers. Assume that this is the internal control mechanism in the branch. Now, those steps are connected with each other. Connected with each other. Right? Without teller, you cannot operate at the grassroots level. Right? Right. So once the teller receives the money, there should be the way of handling it. Handling it. Right? Or if there is any payments, it should be a way of handling it. Right? If there is a check, right? There should be a way of handling it. So likewise, right? These internal control systems have to be there. Right? If there is a mismatch of those internal control system, why? In simple word, there are some authorization process over there. Right? Now withdrawal, yes. There are maximum limit on withdrawal from the teller machines. Right? If you are not satisfied with that particular limit, you have to go to the branch and you have to talk to teller. Right? Then teller may not have this authority. He will go check with his middle level officials and the senior level officials and the branch manager also. Right? Perhaps there might be approval authority. Right? That's the one angle. Right? Another one is loan, obtaining the loan. That is a procedure also. Right? That's dependent on the amount, loan amount. Am I correct? There is a limit to approval for the branch manager. Then the regional manager or zonal manager. Then the AGM or DGM. Then the GM or CEO. Then the board. Likewise, there is an approval authority. Approval authority. Branch manager cannot use, right, board authority to approve the loan. Right? But the regulator, regulator, once the regulator will come and he will look into all these steps. What are the steps of you are following? Right? Whether there is involvement of the senior management. Right? Whether you have tested these systems to get the expected results. Right? So if those things are not properly working, right, regulator will take the actions against the particular institutions. Right? Now see, if those steps are, right, running smoothly, right, those steps are handled or followed by those officials smoothly, there won't be any difficult. There is no robustness on that. If this teller doesn't know about what this next step is, or this senior level officer, he doesn't know what he should do, right? There will be issue on that. So manager doesn't know what to do, right? There will be issue on that. In case of loan, now see, right? Say that 1 billion or 10 billion loan have to be go to the board. If it is approved by the CEO, it may be issue. What authority he has used to approve that one, right? So because of that, that's a system control. That's the quality of the internal control. How that's why regulator will check the quality of the internal control, right? They look at whether those things are robustness or easy to follow, easy to understand, right? Whether they are involved of the senior management, otherwise senior management might be okay. He will pass everything to junior management. If something goes wrong, he will be good guy. Those junior management will be bad guys, right? So this is not a regulator's job. Regulator will look at that, how these controls measures have been taken. Whether senior people are involved, are they aware of that one? Whether junior people are annoyed, whether they are aware of that one, those things they will look into that. And not only that, whether people have tested to run this business, right? At least they must have a kind of trial and error basis, some kind of testing to look into that. Otherwise, right? Otherwise, there's no training, proper understanding of these kind of controls. You can say, no, we have internal control, right? Tell how to do these things like that. But if you don't have proper understanding of the next steps you have to do in case of emergency, right? There will be shown that. There will be shown that. That's what the training and the quality of these systems are important, right? Those things are ultimately come into the compliance staff. That's your obligation to test and tell to the senior management if it is not adequate, right? You have to identify those kind of things and tell that, okay, this regulator's requirement is this, but existing requirement is this, but those are things you have to be improved. You have to have a recommendation to that. Otherwise, regulator will come and check the compliance. They find out the loophole of the compliance officials. That's what most important part I just want to highlight over here. Right. Right. So now, okay, powers of the regulator. Right. Just to tell you, I'll briefly explain those things in the next week. But before that, remember that in the supervision part, there might be issue with regard to the supervisors. We must know the principle of supervisions, right? There are 4 steps over there: diagnostic, monitoring, preventive, remedial, right? Those are the principle of supervisions, right? Supervisors will come and they will diagnose what is the wrong over there. They will monitor it for the certain period. They will recommend some preventive measures, or otherwise they will recommend, right, remedial measures. That's what, right? Those are the principle of supervisions. We'll discuss those supervision part lengthily in next week, right? So up to now, today's lesson, if you have any questions or concern or gray areas, I'm ready to listen to you now.
Sir, could you please simply explain why general laws are not applicable at free trade zone?
I'm sorry, I can't hear you, my dear. Yes.
Sir, could you please explain simply why
Yeah.
general laws are not applicable at free trade zone?
General laws are not applicable to the free trade zone.
Yes.
Yeah, now what you mean by the general laws?
So on the first class, you explained that some custom laws and some laws are not applicable to the free trade zone.
Okay.
Yeah.
Now remember that. That's what the free trade zones are created, right? Now, yes. Let me to explain it again. Now, there are some free trade zones in the different countries. Remember that concept, right? Now, and there are some differences between free trade zone and free financial market as well, right? remember to understand the two concepts. One is free trade zones. Those are in Sri Lanka also. Katunayaka, one free trade zone. Right? Then Koggala, another one. Vietnam, another one. Right? Those are only for the trade. Trade, manufacturing of product and service, and import-export. Import-export. This is a free trade zone. Right? There are some zones called free financial market. Free financial market. Or so on. Right? So most good example is Dubai financial market. Dubai financial market. Sorry. Dubai financial zone. Right? So look at the difference between those here. Here they conduct the financial business. Here they conduct the financial business. Here they conduct the trade. Here they manufacture some items, some goods, right? They will export it to other countries under the certain conditions. Export might be sometimes tax-free, right? The raw material are tax-free, right? Labor is very cheap, and labor union laws may not be a tough. Right? Did you follow me?
Yes, sir.
Okay. Right. This is the free trade zone in Sri Lanka. But if you look at the financial market like in Dubai, there are a few financial markets, Hong Kong market, Dubai market, sometimes they call the Singapore market, and the Mauritius like that. But good example is Dubai. Right? In the Dubai financial market, this market, there's no tax and tariff. Tax and tariff. Banks are free to undertake business. Free to undertake the business. But remember that free means not 100% free. Right? So those business entities over there, right? They are free from the relevant government tax and incentives, but they are come under their common law. Common law means that criminal law will apply. Criminal law will apply. Right? So criminal law will apply, but for the business, their profit might be tax-free. Business might be without turnover tax or anything. Right? Fund can be transferred. But if something goes wrong in a criminal way, those criminal law will be applied. Right? Then wherever you undertake this zone, whether it's a financial market or free trade zone, right? The money laundering and terrorist financing law will be applied. Will be applied. Because of that, now even these trade zones, criminal law will be applied. There are certain concession is given to them. No tax, no import or export duties, some relaxation of labor law. But this criminal law is common to each and every part of the country, whether it's a financial market or right? Trade, what you call that free trade zone or whatever. Right? Don't think that free trade zone means you are getting the relief from each and every aspect. Only for the trade relief. Import, export, and tax, so right, paying the tax to the government like that. Here also, but you are not have relief from the criminal activities, right? So that's the difference between. Now look at the Dubai market. If you want, you can go to, you can find a lot of article on that, right? Those are the laws applied, those are the laws not applied. Very briefly I am explain you. Hope you would understand it.
Understood, sir. Thank you.
Okay. Right, thank you.
Understood.
Any more questions? Any more questions? Okay, right. Thank you very much. We'll wind up class now and we'll see you next Sunday. And we will begin with supervision methodology. Yeah?
All right, sir. Thank you so much.
Thank
Yeah,
you.
thank you, sir.
Bye.
Bye.
Okay, sir.
Okay, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you.